morning friends and welcome to the pre-market view. We've seen smart up move in the global markets yesterday, and Dow was up almost about 0.55% and Nasdaq was up about 1.24% despite the developments in Crimea, as there is a sense that a major military action is averted, and though some kind of sanctions are going to be put in place by the US and the European Union, we are not going to have any immediate escalation in that crisis, which is what is giving some kind of a relief to the global markets, and we are seeing some kind of an uptick. Also, European markets were up anywhere from about 0.56% to almost about 1%. And when we look at the Asian markets today morning, Nikkei is down about 0.45%, and we are seeing some kind of a flattish movement in Hang Seng and SGX Nifty suggesting that we are going to open up about 15 odd points. Back home, friends, our markets continue to remain very resilient, and we've seen good strong flows by the FIs. So yesterday also we were biased to the tune of almost about 1100 crore. The domestic institutional sellers to the tune of almost about 200 crore, and in the index futures we've seen FIs pumping in almost about 415 odd crore. And in our own markets, certain pockets like banks, PSU pockets like Engineers India, BHEL, HP, BP, these are the pockets where we are seeing a lot of strength. But in the last about 1.5 hour of trade, there was a bit of cool off. So from 3 to 5% kind of an uptick, we've seen some kind of a cooling off in these pockets. But the overall bias for these pockets in the market continues to be positive. On that note, let me invite Sadhana to take us through important F&O cues and ideas that we can have from the F&O side.
Good morning friends, let's have a view on derivatives. Yesterday Nifty started the session with a gap up opening and hit a new lifetime high at 6,600 odd levels. Then in mid-afternoon session, market gave away all the gains and Nifty finally stepped the session at 6547 with a marginal gain of 13%. In this period we have seen that long positions were built up by market participants, as around 5.02 lakh shares were added in Nifty futures, and cost of carry also increased by 400 basis points. But on the other hand, we have seen that Nifty futures premium decreased from 34.65 points to 30 odd levels. On a PCR front, we have seen that it is decreased from 1.11 to 1.09, which is clearly indicating that call option has added more number of shares than put option. We have seen that call option has added around 19 lakh shares in open interest and put option has added around 9 lakh shares in open interest, which is clearly visible in the options activity. As we can see, 6,500 put option stands with, we have seen good additions in open interest fund, and as of now 6,400 put option stands with highest number of shares. And on the call side, we have seen that 6,600 stands with highest number of shares in open interest, but we have seen that good activity has taken place in 6,550 call option. Our positional support for the Nifty would be 6460, intraday support would be 6550, resistance would be 6600, and Singapore Nifty is up by 20 points, which is quoting at 6580. There is one security in band period today, which is L&T Finance Holding. And yesterday FIs were net sellers of approximately 300 odd crores in future and option segment. Overall, the bias for the market is positive as we are trading about weekly VWAP of 6530. A low range for the market would be 6460 and resistance would be 6600. But we may see market may continue to remain volatile and uncertain going forward. That's it from derivatives. Thank you.
Friends, here are the important news and events that we are tracking today. First of all, a new format for these ideas. We have divided this segment into 3 categories. First would be the actionable ideas, where one can do some kind of a trade for the particular day since morning. Then we have also thought of a watch list where we would set out certain stocks with positive and negative bias, and other news and updates would be put in the third category. So first of all, the actionable ideas. TCS management has indicated that Q4 earnings would get impacted by the seasonal weakness and the margin pressure of up to 50 basis points on a sequential basis, and this definitely has dampened the sentiment, because first Infosys had warned of some kind of softness, and they had actually said that their guidance would be met to the lower end, and after that we had this kind of a negative comments from TCS, though it reflects on the Q4 quarter only, because for FY15 they have maintained that the overall growth forecast is going to be good, but this could definitely be a negative development. So one can short TCS with a stop loss of 2164, and a target of about 2058 to about 2013. PNB, the management has said that the credit growth for next year would be in the range of about 16 to 18%, and the fact that PNB reported good set of numbers, there is a lot of buying interest towards PSU banks. This could be a big positive for them, so one can go long there with the stop loss of 623 and a target of about 655 to 667. Balrampur Chini, some positive news again, as the country's sugar production has declined by almost about 8.5% to about 19.38 million tons till March 15 of the current marketing year. And on the back of that, there's a feel that the sugar prices could firm up. So one can go long on Balrampur Chini with the stop loss of 52 and a target of about 55.5. And Natco Pharma, it has received the tentative approval from the US health regulator to sell generic version of Roche's Tamiluk. So one can go long there with a stop loss of 812 and a target of about 853 to about 869. Now talking about stocks with positive or negative bias, stocks which can have positive bias in today's markets are M&M Finance, ACC because of the positive news around the M&A activity in the cement space, ICICI Bank, there has been a continuous momentum and institutional buying interest there, and State Bank of India. And stocks with negative bias are the technology pack like TCS and HCL Tech. Now, important announcement as far as the new issue of the ETF from Goldman Sachs, friends. This particular issue is starting from today, which is a basket of 10 PSU companies which will be available to retail investors at a 5% discount, and some of these PSU stocks have actually gone down in the last 2.5 years. So there is a feel that in the next probably 1.5, 2 years, you could see a good upside in this basket, and the fact that this is being available at a 5% discount, and there are a lot of tax benefits for retail investors. So definitely we recommend that investors should apply for these ETFs. Now talking about the other news, France's Vicat is in talks to buy the Saga Cement's 47% stake for almost about 4,100 crore, and this transaction is being done at a premium to the current market price of Saga Cement, and the enterprise value per ton works out to about 120 per ton. So this deal is definitely important from a cement industry's perspective, and we think that there could be another price hike by the cement companies. So the momentum in the cement stocks is likely to sustain in the near term, and we prefer stocks like Ultratech and Shree Cement from this particular basket. Polaris, there are talks of demerger in its product business into a separate independent entity. So there has been a good amount of positive action which is likely to continue in the near term. And in another important development, according to media reports, Kane Energy would not be able to participate in the buyback program due to the tax dispute related to the transfer of assets in 2006. So this is a bit of a blow for Kane, so one can expect some weakness in the stock in today's market. That's it from all of us, friends. Have a great trading session and see you tomorrow at the same time.